Todd Schoenberger is with us, Managing Director.
Oh, is Todd ready?
He's ready.
Hey, Todd.
He's smiling. We're winning. That's something, right, Todd?
That's right. That's right. Thanks for having me back on.
We love having you. Todd, look, Chris and I were just talking about it. This market hasn't moved. My guess is that everybody's been watching the game the last 2 hours. So now we're going to have trading resume again today. What do you think? Are now we moving on to, as Chris mentioned, waiting for the minutes at 2:15?
You bet. 2:15, when that decision comes out and everybody's going to be looking at that statement and they want to analyze it. And there's actually some drama with today's pick because now you have some news reports saying that the Fed may surprise the markets. I don't see it happening, though. I think it's just a little bit of fodder for people to talk about. But realistically, the Fed will probably stick with their holding pattern of keeping rates low for the rest of the year, which is unexpected, and going into 2011 before they'll probably start tightening again.
Todd, how could they surprise the markets? I mean, would it be a statement that things aren't progressing even, I mean, they've been telling us all along, they're very slowly progressing out of this recession. I mean, how can they surprise us? What would they say that could really shock the market today?
Well, the statement came out and actually said something about that the Fed would be looking to tighten policy sometime in 2010 would really shock the market. I seriously doubt they're going to come out and reverse their language over the past few meetings of actually saying, yeah, we're in a holding pattern for keeping rates low or at near zero, and the recovery is indeed taking place. If they come out and say anything that's dire or pessimistic, that will have serious consequences on the market, but that's not going to happen.
All right, but yet, you still are sticking with your original S&P forecast. You're still saying 5% up by the end of the year. How?
That's right. That's right. I see actually this S&P should finish up 5% for the year, and I really think the rally is going to start taking place after the midterm elections and as we lead into the Santa Claus rally. There's a couple of things here. One, the markets are probably they're going to sell off quite a bit this summer. I mean, let's be realistic here. The evidence is there. We saw some very poor housing numbers. Unemployment remains uncomfortably high. We have first-time jobless claims dancing with 500,000. I mean, you could take your pick on what catastrophic event that's out there. But leading into the fourth quarter, when the midterm elections are settled, there will be a little bit more certainty start to go back into the markets. There should be a little bit more of a comfort zone, especially if the Republicans are able to take control of the House and or the Senate. And if that does take place, then you'll probably start seeing a little bit more of a rally leading into the end of the year. I'm sticking with that forecast. I said it before the year started, so I think we're going to finish up 5%.
Todd, the one thing about your notes that really jumped out to me was, and you're the first person that I've really heard this from, Q2 earnings are going to disappoint. Everybody that I've spoken to said, look, of all the underlying bad currents within this economy, that's the one thing we're going to see that is actually going to be impressive. You don't think so much?
No, I don't, Chris, and it's probably why you guys keep inviting me back on this show, because when you look at the past few quarters of earnings and you look at just going back to quarter 3 of last year, you really had a lot of numbers where we were beating on the bottom line. We really surpassed our analyst estimates. But when you start looking at the first quarter numbers, you actually saw that we weren't beating these eye-popping numbers. But what's even more alarming are the top-line figures where you don't have the cash flow coming in because people are not spending money. They're not working, sentiment is low, and et cetera, et cetera. So going into quarter 2 season, yeah, you just don't see it right now. Retail sales numbers have been down for the past couple of months. Housing obviously stinks, and then the jobs number. I mean, I keep going back to the same story, but realistically, I think we should be prepared for a very disappointing quarter 2 earnings season.
And this is why I'm not sure how this market gets itself out of the little hole that it's in. And Chris made fun of me yesterday because I read a report in CFO magazine, but it went through and talked about cash on hand. So many companies have all this cash on hand. The problem is they've cut as much as they've cut. They've fired as many people as they could fire. And there's nothing left to cut. So they're going to have to start digging into that cash fund. And it's going to go down if we don't see that top-line growth.
Yeah, you're absolutely right, Tracy. I mean, you hit the spot on the head right there, because what you're actually looking at is when you start cutting overhead costs by laying off so many people and you still have revenues coming in. Keep in mind, a lot of our companies in America receive revenue from overseas, so you still have people globally that are spending. Now these companies have a tremendous amount of cash on their books, but ultimately, though, those numbers do start decreasing because you still need some money coming in on the top line. And if you don't see it, and I don't see it, and you've actually over the last few quarters haven't seen it, that leads you to think that as an investor, you're going to have a lot of alarming volatility that's going to be taking place, especially once earnings season kicks off in a week.
Well, Todd, we know that with volatility, there are ways to make money. I mean, there's still ways to invest in this market, even if, by your count, we're down by the end of the summer. I mean, what are ways you're looking at right now to where you can tell your clients, look, there's still good opportunities out there? Where are you looking?
Well, I'm perplexed why nobody's talking about this travel and tourism index or the travel and leisure index of the Dow Jones. I mean, you look at the components in there of Marriott, Hyatt, Delta Airlines, and Southwest. I mean, these are fabulous performers this year. Overall, the index is up almost 10% for the year, while the S&P is down. Not an eye-popping number, but it's doing quite well. It's beating it by a double-digit rate. So when you start thinking of people that are traveling globally as well, you have to wonder why investors aren't paying attention to this. And Marriott especially, Marriott has 10% of all of the hotels and resorts in America, yet they have only 1% globally, or overseas, I should say. So they have tremendous amount of growth because they're actually focused on their international operations more than ever before. They're growing. They have a bunch of new resorts going up. I mean, these are stocks that investors may want to take a look at, and these are brand names that people understand.
Todd, how can travel and tourism be doing well when the economy has so many things going against it? I mean, if you're either without a job or you're worried about losing your job, how can you plan a trip? I mean, that doesn't make sense to me.
Yeah, well, that's here in America, but keep in mind, though, globally, when we had a weaker dollar, you had a number of foreign travelers actually taking part of some great deals that were out there from a lot of these companies. The big thing about travel is that what really helped the travel industry over the last handful of years really was the Internet, because there was a way to bundle the travel experience. You can go to one site and book your airline, your hotel, your activities, everything. And there are groups out there that get a cut out of that. So as a result, when you start, like Travelocity, for example, is a great story. So when you start looking at those companies and those stocks, people are traveling. They're taking advantage of the deals. But they're great for travelers, too, because when you go through the bundle approach, you're getting a discount. But it's also great for the earnings and for investors of those companies. So I'm kind of perplexed why it hasn't gotten a lot of attention. Maybe it will as we proceed through the summer, but that is one index that travel or investors may want to take a look at.
Well, our viewers just heard it here. Todd, before we let you go, in your notes, you said BP is done. Does that mean bankrupt, gonzo, or does that mean it gets bought out by something else, someone else?
Okay, they should declare bankruptcy. I mean, let's look at their balance sheet. They have $6.8 billion in cash. Before the crisis or the explosion happened on April 20th, they had a line of credit of only $13 billion. This is a company that is not the size of an Exxon or a Chevron. And here they come out and they're going to give out $20 billion to a third party to administer handling claims. Okay, regardless of whether that's right or wrong, the point is that they're writing a check for $20 billion, yet they come right out and said that they just spent $2 billion trying to clean up the Gulf. And then this doesn't include all the litigation expenses, the legal costs that they're going to have over the next number of decades. I figured BP was going to pay the dividend over the weekend and then declare bankruptcy on Monday. I'm kind of surprised that they didn't do it. They threw me a curveball. But ultimately, though, the prize for BP right now are the service stations. They have 22,900 of these service stations. Those should be auctioned off. Don't be surprised if you start hearing that happen over the next few months as a way for BP to start raising capital, because who would invest in a company that is poison right now? They're more toxic than the fumes flowing up from the Gulf right now. As an investor, you want to stay away from them.
Todd, thank you so much. Great stuff.
Thanks, Todd.
All right, thanks for having me.